Hey everybody, my name is Albert Corey and welcome back to Entrepreneur Success Academy. Right now, this is module 3 of how to open up a corporation. In this module, we're going to show you the 5 different types of business entities. We're going to show you the good, the bad, the ugly for all 5 of them. For almost 4 decades, I've assisted over 18,000 business owners. So you're going to get my experience. Obviously, this is not legal experience, but I'm going to show you what I've been recommending my clients for almost 4 decades. So now on with the presentation. The 4 types of businesses are sole proprietor, DBA or fictitious name, depending on the state, sub-S company, LLC, or a full corporation. We are not going to go over them individually from what, in my opinion, the good and the bad for all of them. The first one we're going to talk about is sole proprietor. Sole proprietor, the good thing is anybody can start a business. Depending on the location, you might have to get an occupational or business license. But bottom line is, if you got an idea, you can just go out and start to do it. Most home based businesses, this is how usually most people start at the very, very infant stage. The bad side is, as a sole proprietor, you don't stand out in a noisy world. We live in a world that people want to see businesses, people want to see corporations. This could be the hindering. Another bad thing about when the sole proprietor is if something goes bad, you're going to be personally liable. That is the bad part of being a sole proprietor, where if things go south, it's just bad that you're going to get sued directly. Now, the next one we're going to talk about is DBA. DBA is really might have been it's a little bit better than sole proprietor because you can make a name and the name can stand out. The funny thing is it's you don't really own the name, but you can use it. Let me good example is anybody can be concrete pours. Everybody can get it. You can't trademark it. You can't do anything with it at this point. It's not a business. Obviously, the two bad points is it's going to cost money to open it up. There's also a good point of this is if you got a corporation and you're going to call it concrete services and the next day you want to open up selling shoes, you can do a DBA and put blue shoes. And guess what? To the world, you're going to be blue shoes. The only time, the only time people are going to know the difference is if you write a check, because a check will say DBA, blue shoes. Another reason why how it will stand out is with this type of company is they can go back and see who owns it. Obviously, if it goes back to a person, you're still liable for whatever happens. And if you're a corporation, the corporation is liable for what you're going to do. Now, the next thing we're going to talk about is an LLC. An LLC is limited liability partnership. All right, what I see a lot of times is partnership means two people. So, but when you go open it up in most states, is you're going to come out and be a single member LLC. That could be good or bad depending on the situation. Chances are it's good because you're a business open, but when your single member LLC would be single member LLC is that just what it is? It's single member. So that meaning that so when you make a profit on your business, basically it's going to go back on your personal tax return. That can be bad for you in the long run because say you're out there trying to build a rocket and you're going to have as a single member LLC, and all of a sudden you have a huge loss. Well, guess what? That huge loss will stand out on your tax return. and that could get you an audit. Now, obviously, what I would tell you to be is the workaround for this. The workaround could be is that when you open up the company, okay, you take 99.999999% and you give your wife, your friend, your kids 0.00001. Now, this really ain't going to be material from the IRS into the world. Oops, shoot, I said up here. To IRS in the world, you're still the majority shareholder. The good side is when you do this that way, you personally will not be responsible because remember we talked about one of the reasons why you open up a corporation in module one is you're now a business, you're a business entity, and business entities cannot be tracked back. However, if you're single member LLC, then you could get tracked back. I'm not a lawyer. Get a lawyer to verify this, but this is what I've been recommending my clients for almost 40 years. Another way to get around a little bit of this is you get an operating agreement between you and the 0.00001 client or the shareholder. So that says that you're responsible for everything, and that should help you. The good side of this is now if you are trying to be a rocket scientist and make a rocket to the moon, you could take a lot bigger losses when you have the two partners because it's a lot easier to show a loss as an LLC, than it would be as a sole proprietor because sole proprietors go directly on your personal tax return. So price goes directly on your personal tax return. When you're an LLC with two partners, it doesn't go on. It goes on its own separate tax return. Another thing is an LLC, as opposed to sole proprietor, you can sell shares of the company. So you'll just, in the operating agreement, you might start off with 1,000 shares. As you start to grow or you want to raise capital, you then can go out and sell shares of your company. There again, I'm not a lawyer. I'm just telling what I've been recommending or showing clients for the last few years. You might need an operating agreement. An operating agreement says that, when you start to have partners with their responsibility, what your shares and everything else, I suggest you do more research or hire a lawyer to write the operating agreement, and that will get you to the next level. Now, the next one we're going to talk about is a corporation. Corporations are good because it's another entity. If you open up a corporation and you go out and make lots and lots of money, the dividends get shifted out to the shareholders. You can have one shareholder, you can have 1,000 shareholders. The dividends get shared out. The other good thing is, as a corporation, whatever is in the corporate name, the name of the business, the corporate entity, it's only worth the value of the company. Almost the same thing we're talking about as an LLC. Let's give it a good example of that is as a corporation. The corporation, if something goes bad, if something goes bad, you open up a corporation LLC, it can't trace back to the shareholders. A big recent example was a few years back is people sued the tobacco companies. They sued and it was for billions of dollars. But guess what? The company had to pay, but shareholders never got bothered. That's why you open up the corporation. Now, my opinion is corporations are bad, especially as a small startup company, because if you make a profit, you got to pay 25% profit. That's right, 25% profit. What does that mean? So if you make $100, you got to give the government $25. If you're a corporation, even in most states, you have to pay a corporate franchise tax. I know in Florida, and that's my home state, You have to pay a tax to Tallahassee, our state capital, no matter how much you make. As an LLC, they give you a big, big, big discount, but corporations, they show no mercy and they want to take your money very, very quickly. One of the other things we're going to talk about right now is a sub S company. See, sub S companies is what I've been recommending to my clients for almost 4 decades. It has a kind of a little bit of both of an LLC element and a corporation element. The difference is it has some of its drawbacks, and we're going to have some of its good things. So now let me go over the good things. The good things is you have the same corporate veil. So if anything happens to you, okay, if anything happens to you that can't come back to you. As a sub S company, you can be a partner of one. Remember, in LLC, you must have 2 people. Have a partner of one, and you could have up to 14, 14 partners. Okay, but you can make only up $249,000. Now, the good thing is for people that are starting up, I'd always recommend a sub S company because, especially if you're doing a small businesses, painting, contracting, anything up as a startup, I hope you go over 250 the first year, but your chances are you're not going to go over 250. So that's why I tell an LLC. I've had a sub S company for 30 years. Now that it went over, it makes you do a couple other things, but I still have my company and I'm still the shareholders. But what you can't have on a sub S company, you can't have real estate assets, or let me rephrase that. You can, but the value's got to be under 249,000. We're in the Miami area, guys. So unless you got like a small little condo, there's nothing to go over. The advantages of an LLC is that you can have unlimited partners. That's why it used to be that when you had a racing horse, they always had it as an LLC, and everybody would have partnership, and you would get a percentage based on what you bought it. So you can have unlimited income. Most people put real estate, at least in South Florida, in LLCs because most of the real estate in South Florida will go over to 250. I haven't heard anybody hasn't gone over. So that's when LLC comes into play. An LLC, difference between an LLC and a sub S, you can have foreign investors into your LLC. You cannot have foreign investors in a sub S company. Unlimited LLC has unlimited partnerships. Sub S company has 14 only. But like I said earlier at the start of this module, sub S company is my favorite one to do for people who are starting up small service companies. So that's what I would use. What another cool thing is if you got a sub S if you have an LLC and you know you're not going to buy real estate, then all you need to do to be a sub S company is, let me refresh, let me do something else here real quick. How to open up a sub S company. A sub S company is you opened up a corporation or an LLC. After it's open, you have to just send one extra form to the IRS. It's called a 2553. You sign it, you mailed it to Ogden, Utah. You'll get a letter back in the mail, and that's it. You'll have your company open, and that's it. So now let's recap the type of corporations or type of business entities there are from the top to the bottom. The first one is a sole proprietor. The second one is a DBA. The third one is an LLC. Fourth one is a corporation, and the fifth one is a sub S company. They all have their advantages. You have the advantages and disadvantages. If you have any questions or comments, please follow us up on the Facebook group, or we'll be having monthly meetings. Thank you, and talk to everybody in our next module.